Welcome to TheoTRADE. This is Don Kaufman, November 8th, 2023. Just about 25 minutes to go to the cash close here on this Wednesday afternoon. S&P 500 in present time, massively unchanged. But are these markets too quiet for comfort? We're going to answer that and much more here on this evening's update. As I was saying moments ago, not a huge amount going on inside of the S&Ps today. As I said, they are, for the most part, massively unchanged. For the uninitiated, well, that means they're simply unchanged at this point. Yeah, looking down the list, some of the usual suspects through and through, you're thinking, they're unchanged. Take a look at the Russell, getting smacked back again. In fact, the Russell, after that wild and woolly bid to the upside, that was the rally that effectively pulled the entire marketplace higher and quite significantly higher. The pullback inside of the Russell has been rather notable. Where is it coming from? There's an easy answer to that. It's a whole lot of the energy sector. If you had told me a month ago, with all of the geopolitical risk that this marketplace was going to absorb, first of all, would I have thought the S&Ps would be bid back? Probably not. But the real one that has got, I think, a lot of people kind of scratching their heads is regarding oil, which has been absolutely hideous, if you will, to the downside. And I think we have to respect at this point in time that the oil trade is less about geopolitical risk, significantly more about possibility of a economic slowdown. And it's just simply something to think about right now, because it's not just oil that would be disconcerting. You see oil coming off big, which is obviously damaging the Russell at this point. Again, Russell, you can look at IWM, you look at the RTY, whatever does it for you. But if we take a look again, now we're going to look at the IWM. We go to auto expected moves. Recognize that, last week, there's this vicious move that's like a 2 standard deviation move outside expected. And yet here we are on Wednesday with the Russell actually breaking through the lower edge of its expected move. And this is, again, it's of significance because it really is all energy. I mean, there's not a lot else to point out to you other than the energy sector itself, which is getting hit hard. I mean, financials play a decent role inside of the Russell as well, but have they pulled back? No, not really. I mean, if you look at this in terms of auto expected move, okay, the financials are slightly lower. I mean, the marketplace as a whole, the reason I'm saying it's maybe markets are a little too quiet for comfort. Like, look, I mean, the SPX this week still has, and again, I want to clarify and quantify exactly the expected move this week, because as you guys know, each and every week, we are into it. Expected move is of probably the number one importance, right? You're looking for a plus or minus approximately $62 move. And I want to clarify again, that is a $62 move. We had some bad data over the weekend specific to the SPX coming from the thinkorswim platform. But you're getting the $62 move, and right now we've meandered a little bit higher. But as I just mentioned to you, so the SPX is effectively higher. Okay, the Russell is quite a bit lower. I mean, the Russell again broke the lower edge of the expected move. Okay, and then we'll look at the QQQ, the Nasdaq here, and bring up auto expected moves here. And the Nasdaq is actually riding like the upper edge of its expected move. And the reason that I'm kind of questioning, a little too quiet for comfort, and then I started bringing up oil. Look at the bond market. Okay, the bond rally has actually continued. So at first I'm thinking, all right, this is maybe a little short covering in here, which it probably was, and a lot of short covering because so many people have been short bonds. And I mean people, institutions, proprietary trading firms, hedge funds. Look, who didn't want to be short the bonds? Look how much damage has been inflicted on a year-to-date basis in the bond market. So this huge pop to the upside. But now, now I'm starting to really contemplate that rally, okay, inside of the bond market. Yeah, it coincides with the rally in the S&Ps to some degree, but it also heavily coincides with the big sell side activity inside of the oil market, which once again is probably more indicative of a slowdown, an economic slowdown. And the bond market would see that really before anything. And when you're saying an economic slowdown, yeah, the bonds are going to rally in an economic slowdown because that would imply that rates are going to be lower. And the interesting and ironic twist in this one, the S&Ps will rally, if it thinks that interest rates are done being hiked. Now, Jerome Powell, okay, was supposed to speak today. He did speak, and it was no comment whatsoever on economic policy. Like everybody was waiting for this speech today. It's comical. They're all waiting for the speech today, and the speech dropped. Okay, when I say the speech dropped at, I believe it was 9:15 Eastern time. I'll just zoom into it. And the market did actually make a little bit of a move anyway. It was absolutely zero commentary whatsoever about economic policy. Nevertheless, okay, the Powellinator will speak again, specifically tomorrow at 2 p.m. I believe that's Eastern time. Again, that's 2 p.m. Eastern time. Sorry, I have to translate the time zone as I am presently on the island of St. Croix. We're in the Atlantic time zone in the middle of the Atlantic. But yeah, it's 2 p.m. Eastern time. Jerome Powell will speak again tomorrow, which is going to be a degree of catalyst. Now think about this, because you have a marketplace, right, where, wow, this is unusual to say, but might be pricing in the beginning of an economic slowdown with bonds rallying, oil starting to sell off, okay? That economic slowdown probably isn't very good for financials. They kind of sputtered out this week or slightly lower. But hey, overall, tech, it seems impervious to anything. And again, it's tech that's carrying right now everything. It has been tech that's carrying everything, and it continues to be tech that's carrying everything. So to answer that question, the market's too quiet for comfort. Look, for me, what's not comfortable is not the fact that it's quiet or not quiet. For me, it's all about, okay, the exact same stocks. And then there were seven, and it's still the same seven stocks, and we were looking literally 2 weeks ago and saying like, wow, Amazon took on some huge damage, right? Really? Because right now it's right back up to recent highs, right? We were looking Nvidia cracking the 400 level, and again, just over a week ago, cracking the 400 level, and here we are to the upper edge of its range. Microsoft, okay, hitting into all-time high territory right now, okay? Apple making a big and strategic comeback from the 165 handle to the 183 handle. We're talking stellar, outsized moves. But when you start to look around at individual sectors in the S&Ps, people, you have nothing. You got nothing but technology, maybe a little semiconductor, and that's it. What are you going to look at? Utilities, they're down. Okay. What are you going to look at? Energy, it's down on the year. What are you going to look at? Financials, they're down on the year. Okay. You want to start to talk about retail? Okay. Flat to down on the year. Everywhere you look, that marketplace is not, okay, producing returns other than tech. And so if the markets are too quiet for comfort, again, that volatility came in nicely. But what would concern me just to the remainder of this week, which just includes, of course, Thursday and a rather quiet Friday, because Friday, Veterans Day, okay? But The bond market will be closed. Okay. Whereas the equity market will be open. And again, equity markets are open, bond markets closed on Friday. But again, probably limited volatility. I think you have to assume that you're going to see, okay, some move towards either the upper and or lower edge of the expected move. It really comes down to order flow at this point being generated expressly inside of tech. Because as I said, right now, there's just nowhere else to run to, nowhere else to hide. It's a tech world, and we're all just living in it. Thanks, everybody, for joining us here at TheoTRADE. Have a wonderful afternoon. Bye-bye.